business on Channel Africa.
Thank you so much, Thami. Thank you for the opportunity. And welcome to you and hello to your listeners.
So we have seen a rise in the economic costs of natural disasters, not only on the African continent, but in all honesty, we are seeing this across the globe. And even with the United States themselves having an intensity of natural disasters, and those actually happening at quite a frequent pace and rate. This is, in many instances, shining the spotlight on the gap that exists within the insurance industry. Could you tell us more about this?
Thank you. So I think you've highlighted really the two key terms that have really impacted the insurance industry from a weather-related and a natural catastrophe perspective, and that is, severity and frequency. We've definitely seen an increase in the frequency of natural catastrophes, and aligned to that, an increase in the severity of natural catastrophes. If you look at the global risk report that's produced by the World Economic Forum every year, weather-related risks and natural catastrophes have been the top 5 risk for both a frequency and a severity perspective for at least the last 5 to 7 years. So there's no doubt that changing weather patterns, changing global environmental ecosystems is having an impact, as you've said, on the frequency and severity of losses. And that is then having a direct impact on the ability and the capability of the global insurance industry to support its clients and to support communities and to support businesses in terms of trying to put them back into the positions they were prior to that natural catastrophe. And then maybe just a final point aligned to that. I think some of the challenges are, if you look across the world, different parts of the globe have really varying levels of insurance penetration. You cited the US, you could look at South Africa. Generally, both of those markets have high levels of insurance penetration, even across Europe, very similar. But you look across the African continent, and the levels of insurance penetration are going to be less than 5% on average. And then if you look at a large natural catastrophe, even if you look at the California fires that happened a few months ago, again, I don't have the correct statistic to hand, but only about, from memory, let's say less than 50% of the damage was actually insured. So there's the cost of the natural catastrophe, what percentage of that is insured, and there's a large percentage of that is uninsured, either by choice, either customers or clients have chosen not to buy the cover, or it's not affordable, or the industry hasn't been able to provide that solution.
Spiros,
And
now,
that all, I think, culminates in that widening gap from an insurance perspective.
So, Spiros, when we look at South Africa's role here in chairing the G20, one of the key aspects is to ensure that the continent as a whole is able to lead in shaping a more inclusive, more resilient, as well as sustainable economic frameworks as far as risk resilience is concerned. And insurance obviously is very much key and central to that. You mentioned that on the African continent, there's less than 5% penetration as far as, insurance is concerned. I mean, do you believe that catastrophe insurance will actually strengthen Africa's fiscal resilience, that it will help protect the infrastructure and support development goals? And how are we going to cater for that gap, for that 95%? That's a huge margin.
That is a huge margin. And again, I think you've got to break it down. I mean, I think that statistic will talk to general levels of insurance penetration across a country. If you hone in and you look at specific sectors or specific segments, so if you look at large infrastructure projects, you look at larger construction projects, you look at where there's a lot of international investment or direct foreign investment coming into the continent, the majority of those assets would be insured. So I would probably say that ratio would spin around and 95% would be insured. So I think when you talk about a lot of the bigger projects, there is insurance there. The challenge then becomes, how do you cater for communities across the continent that aren't necessarily attracting, the big global finance and capital, the big global insurance markets, and the big global risk advisors to try and mitigate that risk management and to try to mitigate that cost? And that's where I think, the conversation needs to be, how do you think about traditional insurance? How do you then think about let's say, levels of or alternative risk financing solutions? How do you think about alternative investment-based insurance products such as index-based insurance or parametric insurance? And how do you try to bring that down and make it available to wider communities? There are initiatives across the continent. There's a variety of those that look to, leverage parametric insurance and index-based insurance and bring it down to the ground, to the community level, to subsistence farmers. So there are solutions there. But fundamentally, I think to try and achieve what is required in terms of closing that gap, it has to be a combination of public and private partnership. We have to think about using existing tools that are available in the global industry, whether that's parametric, whether that's reinsurance structures, whether that's reinsurance pools, and think about how those can be adapted for the widening gap across the continent.
And just as we wrap up our conversation this afternoon, Spiros, can you maybe briefly take us through your role as Marsh in enabling scalable insurance solutions from a country level and country disaster protection, which you mentioned, as far as infrastructure, etc., is concerned, to sector-specific coverage? I'm talking about energy, agriculture, for example.
Yeah, I think as you mentioned in the beginning, Marsh McLennan is a global risk advisor and strategic firm. We're leading globally in terms of risks, people, and strategy. So when we think about our role in what is a global risk being environmental, we need to think about how do we deal and provide solutions to communities, to companies, to countries. And those will vary. So, our experience can be to deliver solutions to companies or industries. We've put together many solutions. We're one of the leading players across the continent when we think about how do we provide insurance for financing, for projects, for construction projects, for infrastructure projects. So that'll be very specific, sector specific. We've worked at a country level with various reinsurance pools or risk pools. We've done work with South Africa, with SASRA in South Africa. We've done work with similar organizations around the world. And we've helped put together quite a variety of public-private partnerships. And again, we've tried to build countries back better. So, the last 3-4 years with the ongoing war in Ukraine, Marsh McLennan has been actively involved in terms of trying to, help the government, think about infrastructure, help the government around creating solutions to keep the country going, and that's been through various public and private initiatives.
Spiros,
and then finally, we've also created some unique solutions specifically across Africa. And the one I'll reference is an entity called Blue Marble, which was really created by Marsh and McLennan, but really looks to deliver, as I've mentioned, those parametric solutions to subsistence farmers across the continent. So effectively, if you have no rain, your crop is damaged, there's an insurance product that can look to pay out. And we've developed those solutions by Marsh McLennan and various insurers across the continent.
Spiros, we'll have to leave it at that for this afternoon, but thank you so much on focusing on what really is an insurance gap, not only on the African continent, but globally as well, highlighted by the South African Reserve Bank as an urgent need, a natural catastrophe insurance. That's Spiros Fatouras, the Chief Executive Officer at Marsh McLennan Africa. He takes us to exactly 4:35 Central African time. Thank you so much for the grace given to us by the economic and the sporting desk, giving us a few minutes to get through that G20 feature. We go now to the markets desk, where Chanduko Legege is standing by with your latest market indicators.